primary feature is rehypothecation. They have a lot of other features. So what rehypothecation means, I see Danny's eyes. It's actually quite simple. It's quite simple. It's a big word, but quite simple. So like in V3, V4, right? You are an LP, you provide liquidity, and then your liquidity just like locked onto the Uniswap V3 contracts, right? And then the liquidity does provisioning, facility swap, all these happy things. For Bunni, what it does is that it takes the unutilized, inactive, like idle liquidity, and then put it out, like lend it out into a lending vault. So right now on Unichains like USDC, USDT pair, it like lends out to the Euler, USDC, and Tether vaults. So that way, the idle liquidity is earning extra yield.
Hello, everyone. Welcome to another episode of the Index Podcast, where we come together every couple of weeks to discuss on-chain data, chart crimes, and metrics that move the crypto industry. Today, I'm joined by Danning, on-chain core at Flashbots.
Hi.
Hildoby, resident data house at Dragonfly.
Hello, hello.
Jackie, flow hunter at Uniswap Foundation.
Hello, hello.
And Grace, the terminally on-chain unicorn at Uniswap Labs.
Hi.
And I am Boxer, and I am, of course, the community powerhouse at Une. Before we start, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice. We are acting independently of our respective professional roles. And with that, welcome to the both of you. And today we're going to do a deep dive into Uniswap V4, Unichain, and kind of generally the Uniswap ecosystem. And I think the first thing that always comes to mind when I look at the both of you or meet both of you is where does one role end? Where does the other one start? So maybe if anyone can kind of, maybe Jackie, you can go first from the Uniswap Foundation perspective. What's your role kind of encompassing?
Yes, sure. First of all, the Uniswap Labs and Uniswap Foundation are two completely different legal entities. Just want to put it out there. And then, so for my role, so I lead data on the Uniswap Foundation side. I would say Foundation focuses more on the ecosystem growth. So what that translates into, earlier in the year when Uniswap V4 and Unichain launched, of course, we would look at the growth and adoption of Uniswap V4 and Unichain both. And later on, we moved on to having hook incubation. So the past 2-3 months, I would say, I focus a lot more on kind of supporting the hook teams in the cohorts. So I think we're just starting cohort 2. So in cohort 1, Euler Swap, Bunni, Solo Labs, Rezo, them to actually go from the research and development phase to go to market phase a lot more. And then aside from that, I also focus some of my time on the research side. So a big project right now is on LP profitability research. So yeah, I would say ecosystem growth / research in the ecosystem.
All right. And the product surface areas here are kind of the foundation owns Unichain and the protocol. So that's mainly what you're focusing on.
I don't know the word owns.
Yeah, I wouldn't use the word. I think both Uniswap Foundation and Uniswap Labs have worked on these products.
Yes.
And their focus is on the growth of these products is a little different, is how I would describe it.
Yeah. Okay, I see. But the foundation has no stake in Uniswap Wallet, for example. So that's
that's a different product.
I see. And Uniswap X?
Uniswap X is also a different product. That's
okay. So I think that's where we already while Jackie's focused on these things, Grace, you also deal with all of those products, service areas, however you want to call them.
Yes. So I work on our protocols team here at Uniswap Labs, and protocols encompasses, the Uniswap versions, Unichain, Uniswap X. Most recently, smart contract wallets. We just launched our smart wallet, so that's now another thing that we're working on within our protocols team. So there are some differences. There's some very distinct differences, I guess. But yeah, previously, I guess, beginning of the year, my focus was on mainly V4 and Unichain. So Jackie and I would get to work on the same data.
Some differences, also some overlaps.
Like a Venn
It's still not very clear here, but we'll get there. We'll get there.
V4 and Unichain, the Venn diagram is
yes, it's in the middle for Unity.
well aligned.
And then outside, there's like wallets, router, Uniswap X.
Yeah.
The side on the foundation side, like hooks, research.
Yeah.
Fair enough.
So I guess both of you are hook whisperers, and whoever can tell us like what exactly is V4 or why Uniswap even launched the V4, I think that will be a good start.
I think V4 was a kind of in development in everyone's minds for a long time. Even at the launch of V3, basically the protocols team was kind of thinking about how can we make the protocol as expressive as possible in terms of flexibility and customizability. And so I think the big push with V4 is that, it really creates like a platform for AMM development. And it allows you to really like plug and play at so many different places in developing an AMM that, it creates a really cool system that, developers can then build upon, and for any type of liquidity can really have the functionality that they would need in order to create a marketplace for those assets.
When Uniswap V3 launched, it kind of placed itself in a different category to Uniswap V2, where Uniswap V2 remained the prevalent protocol for tail-end tokens that require, that have less liquidity, and it's just easier to manage in terms of liquidity. How do you see Uniswap V4 play? Does it replace both of those, V2 and V3? Does it play a different role? What's the Venn diagram like?
That's a good question. At least right now, we haven't seen that replacement functionality kind of pop up. It seems, in my own view, I kind of see it as another piece in the puzzle, but not overtaking the puzzle itself. Like, it doesn't need to cover everything. It has a very specific use case. And I think that we're starting to see V4 kind of develop and grow into what that specific use case is. So, as you mentioned, kind of V2, you see it's very easy to manage liquidity. It's very we see a lot of long tail assets kind of pop up with V2 pools when they first launch because it's simple to understand and it's simple for a lot of users. And then with V3, we have this general hypothesis that there's a lot of users that are very active and are very well informed in how to manage their positions and deal with concentrated liquidity and make sure that they're optimizing their returns correctly. And I think with V4, you add in a whole other level of, which pool do I LP into? How do I manage this position? If there's a dynamic fee, what am I doing? But at the same time, I think because V4 is so customizable, you get kind of hooks like Bunni, where LP, the management side, is kind of handled for you. And it's actually a little bit easier then because you don't have to kind of have that constant attention to your LP position in order to reap the same rewards. So I think we're going to see kind of V4 position itself somewhere. It's somewhere in between V2 and V3, in my opinion. And I don't think that either V2 or V3 will go away now that we've launched V4. I think it's just going to create actually new modes of liquidity and new modes of, AMM. There's going to be more pools now, is what I'm trying to say.
I completely agree with that because it's like V4 makes things so much more expressive, but obviously existing use cases were already covered. So I feel like it allows us to bridge into new space. So very simple example is dynamic fee. Before, even in V3, even though you have multiple tiers, it's still limited tiers. But now, if you see on the mainnet, I don't know if it's still true now, but the mainnet had I believe a 0.01% swapping pool, and then it's only possible on V4, right? Long term, is it actually good for LPs? Probably not, but for experimental purpose, these kind of experiments can be run because it has dynamic fee. So that's a simple example. A more I guess Bunni is a great example of how hooks enabled by V4 can start have like new use cases being discovered. And then I also feel like it's a great opportunity to bridge DeFi and TradFi together. I guess, I know we always have like different feelings about KYC and everything, but like if you want to expand into TradFi, like these things do need to happen. And like if you want to turn it into like perps, like limit order, like all these things is only possible with V4. So I completely agree with like what Grace is saying. I think it's actually expanding the total addressable market of swapping.
I saw Dobby had a question. What is Bunni, if you may explain in details, Jackie?
Yes. So Bunni is a type of hook that I would say their primary feature is rehypothecation. They have a lot of other features. So what rehypothecation means, I see Danny's eyes. It's actually quite simple. It's quite simple. It's a big word, but quite simple. So like in V3, V4, right? You are an LP, you provide liquidity, and then your liquidity just like locked onto the Uniswap V3 contracts, right? And then the liquidity does provisioning, facilitates swap, all these happy things. So for Bunni, what it does is that it takes the unutilized, inactive, like idle liquidity, and then put it out, like lend it out into a lending vault. So right now on Unichains like USDC, USDT pair, it like lends out to the Euler, USDC, and Tether vaults. So that way, the idle liquidity is earning extra yield that's parked onto the vault. So it's not only the active liquidity that's earning the swapping fee, the idle liquidity is also working hard. I guess I will also say, obviously, the risk that you're undertaking here is drastically different. Whether you use your liquidity to facilitate swaps, or you park your liquidity literally like in a different protocol and earn yield that way. So it's not like you just get money for free. But it's very exciting. I guess time to show chart. Is it time to show chart? You can see how the rehypothecated yield. I can extract the chart. Basically, right now, if you compare the same USDC tether pool on Uniswap on Unichain, the V4 vanilla TVL is like kind of higher, and then the Bunni TVL is slightly lower. But if you look at the trading fee, or the LP's earning accounting wise, the trading fee plus the rehypothecated yield. So the vanilla pool doesn't have the rehypothecated yield, right? So it just has the trading fee. You can actually see that with less TVL from the Bunni pool, it's earning more, and the vast, like 99% of the money for the Bunni pool is actually coming from your rehypothecation. So the Bunni USDC tether pool is set with like extremely low feature. So it doesn't make that much money from trading fee, but it like makes a lot of money from the rehypothecation.
Does this still largely follow the V3 concentrated liquidity model? Like, is that still kind of the underlying swap curve mechanism?
For Bunni, or
yeah,
they have their custom curve, but it's still because they need to, they have other features like auto shift, making sure you're always in range, but they still concentrate your liquidity.
Okay, so they have a custom curve, and then is it only stable, or is it also stable volatile pairs?
It's everything. Yeah, it's also stable volatile.
Okay, so they have like custom curves for different pairs, I would assume. Because I'm like, what I'm trying to get to is how do they make sure that like if somebody comes in with like $1 million swap, that enough liquidity is inside of the pool, or do they kind of like do just in time liquidity provision, kind of like get the stuff back from the lending protocols, put it back into the main, like how does that work?
The just in time is actually Euler swap, which we can get to later. Bunni constantly rebalance, so it like constantly try to keep like a portion of the liquidity inside of the pool itself. So it doesn't do just in time, but it would like kind of withdraw the liquidity back whenever it's needed.
So it kind of monitors market situation and then decides based on that which ticks should I actually have liquidity in here.
Yeah, I think they have like very fancy functions calculating this.
Okay, so essentially it's kind of like, it's almost the inverse. Like it's like you're just yield farming, like in whatever they're depositing in, and then additionally you're getting swap fees for like a part of this. Because like if I'm like the 1-inch router or whatever, or like I'm a tax router, whatever. Like, if any reasonable actor like looks on chain and then it's like, okay, I'm trying to swap whatever 10 million USDC to USDT, and I call the Bunni hook Uniswap pool, and it's like I just see like, hey, there's only 1 million of liquidity in there, then I'll probably not route via that pool, right? Or is that like does some Uniswap router sit in front of that, which can then kind of tell the Uniswap pool to like pull in more liquidity at that moment in time? Probably not, right?
I am not versed enough to talk about the routing side, but I do know the routing for these kind of hooks need to be custom supported, because discovering the liquidity is its own whole issue.
It does sound like you're just yield farming, and then sometimes you also get swap fees. But if that allows people to generate more yield on their assets, like that's a good mechanism. And with that kind of like, what's like, as a developer, why would I use Uniswap hooks, and why would I use the V4 protocol and not just build my own thing? Like surely it's very complicated to like do all of this, what like fit my protocol logic within the hook thing. So like what's the and this distribution? Like I actually met some guy in like Cannes, and he was building some like stable to stable decks, and like I was like, okay, like so how do you solve the distribution problem? And he's like, I just talked to the aggregators and the solvers, and now the solvers have integrated me, so like distribution is actually not really a problem. Of course there's kind of like a chicken and egg problem where like you need to get like a certain amount of liquidity for the aggregators to actually start indexing you and for the solvers to give you business. But in the end, it's like Uniswap as a platform is not it has already been disintermediated through like CowSwap and 1inch and Matcha and like all of these different aggregators, right? So like, what's the pitch for building on V4?
Well, like, so when you say building on V4, you mean like how, as a V4 hook, how do I even get adoption?
Yeah, I mean, why wouldn't I just try to build my own DEX at that point?
Well, I think like V4 definitely like free up so many like, how to say, innovation on how you can protect the LP, and or like you can, incentivize people to come to your pool because you're providing now this yields that's like on average like higher than your return you can be if you put in a V3 or V2 pool. And so supposedly, theoretically, there will be LP moving over. Second of all, launching a new project, you always have a token path. I'm not saying on behalf of V4 they're gonna launch a token, but like at a certain point of time, possibly there was going to be no extra yields by this token that we have as like holding the LP. And third of all, I've heard some really interesting new, how to say, I don't know if we can call it like payment for order flow, but like some new kind of like, how to say, partnership that can happen between a pool liquidity versus with like a routing or a solver. So like if this solver now using my V4 hook liquidity, possibly I can give them some incentive and they might promote our liquidity, even though sometimes our pricing is 1 bips, 2 bips worse than the other liquidity. So I think there is a lot of path for V4 hooks.
It's also probably easier to build on top than rebuild everything. And as time goes, it's going to be more and more battle tested to use Uniswap V4 rather than like rebuild it from scratch and worry about all the rebuilding of Uniswap V4, I guess.
Absolutely. I was going to describe it as like building a table from scratch versus building one from IKEA. Like there's a little bit more of a template. And so therefore it's a little bit easier. Yeah, you can go build your own table, but like, sometimes people want a little bit of instructions and they want to know that someone else has like thought thoroughly through the problem previous to them and is there to kind of help them and guide them.
And also you have the V4 Uniswap V4 branding. You have Jackie working on the data for you. So like it's a whole network effect.
I was also gonna say it's actually not. The power of Uniswap V4 is that it's different from Uni V2, V3, right? Like it allows you to link to the hook. And I think the business license is still like within the range. So like if you want to do interoperable things, like what Uniswap and Euler did on Euler Swap, like you must go through this like very much audited Uniswap V4 core contract. And it's like there's like a set like 11, 14, whatever, like functions that you basically are like the entry points of you allowing into the Uniswap V4, right? So it's like what Grace said. It's like defined paths of what you could do, and this is like one of like the only place that allows you to be so expressive and like build on top of each other. So that's why you would choose, besides the distribution.
I think as time goes, we're going to see more and more of these. Like, we're going to go further and further into complexity of contracts and stuff. So hopefully, this kind of like Lego kind of styled, using a contract top of each other, is probably going to be more and more safe going forward. Because as long as the bottom one is battle tested, you can just keep on iterating and building on top. Maybe, I don't know. That's probably just a hunch, but that's just how I see things going. Same thing happens with data sets on Dune, right?
Yeah, hopefully. But like Eulers, for example, still underwent an audit, right? It's not like I built the IKEA table and then it's just safe forever. It's like still an inspector comes and it's like, you've built this table correctly.
Yes, but also for Uniswap, the distribution is, well, in my opinion, is like also one of the main reasons to join forces. Because the other point I was going to make, you're like, oh, they could just like talk to the routers. But if you like look at it, the Uniswap front end and like the Uniswap pools itself still gets a huge share of the market share, especially on like the top pairs, like the USDC with USDC Tether, USDT WETH. It's still like more than 50% market share right now on these like top pairs, excluding Solana. But it's just like within EVM, if you look at the data, I'm like right now the past 7 day, Uniswap still has like 51.5% of the share. So it's still like a huge distribution channel for people to go through. Your doubt might come from other chains. They had a spike. If you're thinking about BNB, PancakeSwap, they did have a spike. But ever since the Binance Alpha Growth program sort of tailed down, it's kind of come back. The Uniswap, it went up again.
Denning, do you have any insights into those? Like, have you been monitoring the situation?
No, only Jackie can do this.
Boxer's like, I don't believe this is on Dune. Again, do you want me to show you the chart? I can pull.
Yeah.
Yes, please. Actually,
Actually,
I've not been. And like you're talking about the major pairs, which is ETH, USDC, ETH, Bitcoin, or like WEF, Rep Bitcoin.
Literally these three pairs. Like the number one protocol is still Uniswap.
Okay. Wow.
Yeah, I think sounds like it's a perfect time to dive into all the charts, landscape, adoption numbers, but before that I want to have like a subtopic, just quickly have you guys to share because about like how V4 data can be different from all the other protocols. Because sounds like so far the basically the theme of V4 is expressivity, customization, and complexity. So I can imagine that actually definitely gives a lot of like data work, or like it can make the whole data work different.
Absolutely. So without getting too detailed into it, I think the main difference ultimately is like in how V4 is built, and that kind of trickles into what the data looks like ultimately. So we used a singleton contract for V4, which is very different than the factory models we previously have used. And so therefore, the events look a little bit different. Kind of the data that we need to track, as well as the whole concept of hooks, I think really alters our understanding of like just looking at events for a specific contract and having that be comprehensive of whatever metric we're looking at, right? So with this vague description, I'm talking about TVL. So I think that's kind of the main difference that we see is, some of the events that used to be nicely broken out and nicely including all of the information that we potentially would need in order to calculate certain things like TVL or volume, now kind of are slightly more compacted. So we have like a modify liquidity event instead of add, remove, collect, or a mint burn, etc. And we still have the same old swap event. Our initialize event is slightly different, but it's still the same concept of initialization is just creating a pair or creating a new pool. And then I think the final difference is this, like Jackie can talk about it a little bit more, but it's just the concept of things existing also outside of singleton within hooks themselves. And so that's where we get, you can't just look at just what happens in singleton. You can't just look at modify liquidity for a given hooked pool. The pool's not hooked, then you can, but that's a whole other thing. So yeah, I think Jackie, if you want to touch on just a bit about what actually changes when you have a hook that has liquidity or volume within it, and what that looks like, that'd be awesome.
Yes, sure. Danny, did you have a question?
Oh, I wanted to like try to have like a Eli metaphor to understand this better. So like maybe this is not still very Eli, but like in the past there's multiple pools, so there's like multiple ledgers holding multiple like accounts balances, and you have to basically access all of them. But they kind of somewhat have the same unified rule of accessing the liquidity. But now it's kind of like one ledger or like one single unified pool, but there's multiple like how to say sub rule to access different liquidity within it as like different hook rule. Is that right? Or is there any better, like metaphor? But
Let me try to think of a metaphor off the top of my head. My mind initially goes to the Industrial Revolution. Sorry, like sorry, it's called a factory model. Like that's where we go. So I think the factory model is you're really like you're producing the same thing over and over again, right? You're producing the same pool that has the same set of standards, that has you have the same expectations for every pool that's created. Versus now we're kind of post-industrial revolution, a little bit of artistic renaissance, right? And we're saying, okay, we actually don't want to make a million of the same things, because then everyone else has to run around collecting all these things in order to figure out what's the best price for everything, right? So we figured out like Singleton makes it kind of cheaper, faster, easier to route through all these different little packages that are all the same in one place. And so you could ultimately think of, now you have this one specific place. Let's call it, it's not a factory now. I don't know what to call it, but it's a warehouse of sorts. And basically,
it's a commune, maybe.
It's a commune, exactly. Everyone exists all together. There's no differences. And essentially you can like plug and play with like different ways. Think of it as like maybe like the factory now, like the robots can create different mechanisms so they don't produce the same thing every time. You can like almost customize them so that they have certain features. And so they're ultimately, all the production's still happening within the same building. But it's like customizable, if that makes sense. I don't know. This is maybe not my best metaphor. We kind of went downhill after the Industrial Revolution. And maybe that's the real metaphor.
We tried. It's hard.
It's communism, but it works.
Yeah.
That's like works. Because I think like the data challenges it introduces is that like using TVL as an example. Historically, like I would say most analysts never rely on like liquidity modification events for TVL calculation. They look at the ERT 20 transfer in and out. You're set because each pool is its own contract. But V4 is like one big glorified accounting system where everything's together. You have debit, credit, blah, 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 like internally, which means that there's like no actual transfer that is happening in between contracts. Like the one contract does internal system for everything. So now for the first time ever, you have to rely on like modify liquidity, for example, to actually derive out your TVL. So I feel like that's among many challenges, that's like one good example of how like the V4 singleton contract changes everything for you. And I guess quickly just touch on like hooks, because this one glorified accounting system also has outside connection. So the outside will like also be able to modify the accounting, like credit and debit here. So you need to have like an event almost, like a little pipe that allows you to do the credit and debit to all the outside hooks.
Okay, I have maybe a metaphor. So like in the past, the V3 is like when you join a new Taco Bell, and then you have the same basically way of like treating and like training everything, and you're selling the same kind of like products. But now it's like we have this new marketplace, and then you can join, but you can define your own like products, the goods and pricing and everything, but you live in the same shopping mall.
Shopify.
Shopify actually works because it's just the rails that you build on top of. But right, enough with the metaphors. I think the listeners will not love this. So yeah, maybe from here we can just start looking into the adoption of the V4 protocol and how it's still. I think we already talked a bit about V3 versus V4, but let's actually look at some data. I think, Jackie, that must be your screen. Yeah, maybe you can just walk us through how V4 adoption is going.
Been 158 days since it's publicly launched. So the TVL has actually crossed the $1 billion mark. So I guess zooming in on the TVL, you can see that there was like liquidity mining incentive that was launched on April 15th. So since then, you can see like a steady increase of the Uniswap V4 TVL. And then I think, when did we hit 1 billion? July 4th. Oh,
Yeah.
July 3rd. Oh, even before that. Sorry, I'm like discovering this live. Okay. So
Also,
20.
for context, I feel like the percentage of Uniswap protocol TVL in V4 has now reached around 25%. So like a quarter of the TVL in Uniswap is in V4 now, just to put that 1 billion into context.
Yes. So you see the steady increase of Uniswap V4 TVL now. But I guess one thing to stress, this is singleton TVL, not necessarily like all of the hooks TVL. Yes, so then going back here, 1 billion of which like the majority is now sitting on L2s instead of the mainnet, which is interesting because in the beginning, like a lot more was sitting on L1, but like at some point it flipped. And this is what I was kind of alluding to earlier. Even within Uniswap V4 itself, you can see this huge interesting spike on the BNB chain. We kind of looked into a little bit. It was like related with the, I don't know if you guys like remember the ZK token launch and the Binance Alpha program launch. So it kind of like rose up, like really peaked, and then has since then like kind of stopped. And then the most dominant chain for volume is like Uniswap V4, followed by the Ethereum mainnet.
I think you mean Unichain. You just said Uniswap V4.
Oh, sorry. Yes, I meant Unichain.
All good.
Yes. And then in terms of hooks, we're now hovering around like 10%-ish in terms of volume that's flowing through hooked pools. This huge spike was associated with the flunch in the beginning. And then the most recent one are the more like launch of Uniswap and Bunni and like Solo Labs. They are like contributing a lot to the percent of volume going through hooks. And then I guess on that we have a little chart of the hooked volume. You can already see it's already in the millions per day for these top hooks. So it's like already doing quite well for like early successes, I guess, for these hook types. We have apothecated type, just in time liquidity type, and dynamic fee type. And then yeah, I guess in terms of like the Uniswap V4 volume adoption, so since it launched, pretty much now we are at like 30-ish% for Uniswap V4. And then yeah, earlier we had a conversation about like, you know, V2 versus V3 versus V4. Clearly we still see like a bunch of tokens are still using the V2 model and then V3 model, and then slowly but surely you see the V4 model now.
I'm curious, like, so I feel like V2 volume will always exist because like some like long tail meme coins just so easy to like go deploy a contract. Do you see any type of use case or like liquidity use case will just fit easier or better for the old model over V4?
I think it's like a liquidity migration problem. Like if a pool is already doing really well on V3, to kind of bootstrap the liquidity migration to a new pool, new chain, new fee tier, like is it really worth it? And without the TVL, you actually won't get like better execution quality. Then it's like unless you intentionally try to migrate the liquidity, which Uniswap Foundation is doing with the like liquidity mining to migrate V3 to V4, then it's like I think without coordinated effort, it's hard to actually migrate. So I think it will still exist in V3.
Gotcha. And also like one other thing you mentioned earlier about like say singleton TVL is not equal to all the V4 TVL combined. I guess why is that? And I guess like here when you calculate TVL V4, you will have to treat not just the singleton TVL?
It's actually one of our bigger challenges now still. For chain level TVL, we still kind of pull the data from DeFi Llama, and the way DeFi Llama tracks is still pretty much like ERC transfer in and out. So it only accounts for the Uniswap V4 pool managers like liquidity locked there. But for Bunni, for example, I can quickly show you. Bunni as a pool, for example. So I was talking about earlier, let me just hide the vanilla pool. So you can see that the composition of Bunni TVL is both the active liquidity and the inactive, like rehypothecated liquidity. And like the rehypothecated liquidity, even though it's part of like Uniswap V4 liquidity, because it like LPs still deposited through Uniswap V4, right? But technically the rehypothecated liquidity is now sitting on Euler contracts. So if you don't track the Euler contract liquidity, then you're like missing that part, for example. So that's why the complexity really comes in. Like, how do you properly track TVL, and like what is the definition of TVL? Because technically, like total value locked, it has to be locked here. So it's not really like locked on the V4 contract, but then it actually does belong to the V4 pool because it's like available to be swapped. So that's where like some of the challenge comes in, and we're still like trying to figure it out.
Gotcha. I see. Like, so otherwise, if you just like simply count the total, it might be overcounting actually the usable like active liquidity because they're out doing something else.
No, it's undercounting. So the current TVL, V4 TVL, does not excludes the TVL that's not sitting in singleton. So there's two scenarios where it like excludes. One, the custom curve. So the TVL sits on the hooks themselves, and then there's this kind like Bunni. It actually further sits out somewhere else. It's not only like part sitting on the hook, another part is actually sitting in Euler vaults. So like these two parts are like just not tracked at all by the V4 pool manager.
Gotcha. I think like it's a perfect time you guys should invent a new metrics over TVL. It's like maybe something more accurate, like TVLA or like something else.
TVLA? What does A stand for?
Like active or...
There's TVS as well, total value secured, which I think L2Beat like made a move from TVL to TVS, but I'm not clued in exactly on how the two exactly are different.
TVS is kind of more so, I think of it as like a general chain metric.
Okay.
It's like the value available on a chain, either natively minted, canonically minted, externally bridged, like all the value that accumulates in a given chain, essentially.
Yeah.
TVL, I think, is one of those metrics that can be applied to many different things. So like there's chain TVL, which like questionably assets on chain, like that's kind of TVS more so. So I think TVS is the better metric there. And then there's TVL with regards to DeFi protocols, which is realistically different for swapping versus lending versus like, I think it's really I agree. It's not a great metric. I think it'd be funny to re-evaluate and relabel TVL for V4 maybe as like, I don't know, total value available for swapping.
I welcome lots of help on this, because with Euler swap, the TVL situation is even more confusing because they do the reverse. So it's like there's available liquidity, there's liquidity locked. Which one do you
yours? You're absolutely right. We should probably it's time for a refresh, but
TVS actually works quite well now, since like Uniswap V4 is kind of a platform, a protocol that other people can build on top of. So it's
you mean like
I think secured,
kind of like,
but it's not really secured. Swap, right? Because like with Euler swap and Bunni both, like it's not.
No, but you like you told me earlier that the hooks are safe and I only need to follow the instructions and then everything will be good.
Oh well, it's secure in terms of that.
Yeah, so like you're securing, because like from the perspective of DeFi Llama, it's like they can't double count this, because like they can't have the TVL sit in Uniswap V4 and they can't have the Uniswap, like the active liquidity that's not really inside of Uniswap at the moment, but rather deployed into Euler swap. Like that would be double counting, right? So like I think it's actually like it actually seems kind of correct to be like, this is the total value locked, in here at the moment. It's like this is this actually sits in the Uniswap contract, and then something else is deployed somewhere else, and this is more like a whatever. This is secured by, or this is associated, maybe TVA, like total
TVA,
value
I was gonna say
associated or something.
Associated, yeah.
But like so from DeFi Llama perspective, I can actually see their point of like we're only gonna track the ERC20s, because otherwise you get like a dependency graph of hell of like what do we do if like pools redeploy capital 3 times.
Yeah.
I think there's like a similar thing happening with Morpho. It's like the Morpho vaults are like lending money, are like you're lending money to someone to like then do stuff with, but it's like it's not really like, it's like some people just go off and do like run hedge funds while I have deposited into Morpho. So it's like, how do we count that? So yeah, new paradigms require new metrics, I guess. And TVL has been kind of a meme for a long time. So maybe you guys can come up with something fun.
Total value available. Big fan of that. TVA. It's got a ring to it.
Yeah. I think like TVL still makes sense, like has its meaning across DeFi lending protocol, where it kind of imply like total value secured anyway. It's like how much liquidity I can attract and to like lock in my platform. But now there's like a, how to say, nuance of like how much of them are usable or routable or sourceable by swapping. And so like there needs to be another nuanced metrics on top of it. And I mean, like in general, because like people would usually assume like TVL is like how much liquidity I can use, but now it's not exactly that.
To get back to these numbers here, I'm actually I'm very surprised that now Uniswap V4 makes up 30% of the volume of all pools. That seems high.
Of all Uniswap, not like
But of all Uniswap pools, that's still like, if Uniswap makes up 50% of all DEX volume, like how did we get here? Like what are people using? It's just liquidity incentives, I see, or like liquidity mining incentives. But then what are the pools that are driving this volume?
for Uniswap V4.
Yeah.
I don't think we have a breakdown, but anecdote. Yeah, do you have a breakdown?
I only have a breakdown for our interface actually, and so I have like anecdotal information because we realistically see the same pattern kind of through our interface. And I think one of the big things that we haven't mentioned yet with V4 is the reintroduction of the ability to swap native assets, as in ETH. You no longer have to, under the hood, take that ETH and wrap it to WETH and then deposit it in a pool or swap it. You can actually do it with native ETH now. And I think that makes things slightly cheaper for everyone. And I think it's been a big unlock and a reason that we've seen a lot of the volume that we have kind of go over to V4 along with the liquidity incentives. So yeah, most of like the top pools we see for V4 right now have been like either stables to ETH to, kind of shorter tail, maybe assets, or stable to stable. We've seen stable to stable as well, mainly stable to stables on Unichain with tether to USDC.
So does that mean there's practically no wrapped ETH on Uniswap V4 because it's unnecessary?
Yeah.
That's cool.
Yeah.
One other great metrics I want to call out, just looking at this charts, this page right here, is that if you look at the volume breakdown and the TVL breakdown, it's telling me like volume divided by TVL already showing that V4 is 2x like capital efficient than the others, right? Like you have 30% of the volume, but you have like pretty much like only half of the TVL compared to V3 and V2 for the V4. So I think that's a great other marketing metrics you guys should call out. I mean, I don't know if that's true. So it looks so. The chart shows.
Yeah, we should properly lay it out. And
Yeah. If we're just looking at the ratio of TVL to volume, V4 is doing quite well.
Yeah,
absolutely.
Some capital efficiency metrics would be cool. I agree.
Is there incentives to swap?
I think it's like weighted differently. Like TVL and swaps maybe are both more weighted. I actually am not super tuned into the parameter how Gauntlet and Merkle are tuning it.
But there might be so there's not only liquidity incentives but also incentives to actually use V4.
Oh, you mean like that? From Uniswap Foundation, we're only running the liquidity mining incentives.
Yeah.
which doesn't sound like supposedly gonna inflate the volume number. Yeah. And I mean, like, if you're thinking about like the case of like, say, they are trying to like optimize the liquidity that is not active to do something else, sounds like it will intuitively translate to this. But I think like overall, it would be interesting to have a deeper dive on this.
Does V4 allow for more arbitrage opportunities, or like, since I guess it's cheaper to route transactions throughout the pools, does that mean there's more capital to capture or anything? At least in atomic arbs or
That should be the opposite, because like the stale liquidity are basically the one that's not active, and now it's not very visible on V4, and like that's basically what being arbitraged usually.
I guess you can track like off chain, like the TVL of each pool in a way, uh, and route in the same way, except it's just one contract, right? Why wouldn't that be the same?
Oh no, like as in like it sounded like a lot of this design is like taking the inactive liquidity to do something else, and those are usually the one that sits in the V3 pool that are getting arbitraged, and so
Oh,
now
but
like these type of liquidity are less visible, like possible on V4.
I think that's only hooks that allow you to do this, but like by design, it doesn't rehypothecate your capital across multiple pools on UV4, right? You still
Right,
have no.
yes, but I believe also like the dynamic fee one are like basically trying to add extra LP fee on the transaction comes in, right, trying to arb, etc.
Yeah, I think it's like definitely like an interesting thing on the to-do list, like looking at the arbitrage, but just using Hilda like your existing kind of logic, like looking at the transaction level, specifically on Unichain. And Unichain is like mainly V4 pools and V4 swapping. There's like barely any atomic arbitrage as you like define.
So my method you're going to see on Dune is going to look at every single trade, if
Mhm.
trade events, but
Mhm.
UniV4 only emits one. As far as I know, it doesn't. Does it
No, no, no,
emit
no,
like
no. It's every swap. Yeah, every swap it will
every
have.
swap event internally?
Yeah. Because actually,
Okay.
we're using for Uniswap V4, we're using the swap function traces, and every swap
Mm-hmm.
it will have like a swap trace.
Okay. Okay. Fair.
But
Then
I
I have no
also
doubt
have
internally.
other things to challenge, which is like I think the Unichain is very different to compare as apple to apple to Ethereum, because
True,
like it's
true. It's very
you know,
fast.
yeah, it's like single sequencer. There's no mempool, and like it's faster
Yeah.
chain, so people maybe spam arbitrage on top of it compared to on Ethereum. You can like simulate
Yeah.
locally. The cost of entry is different. I think also like so like a better comparison would be like comparing on Ethereum versus V2, V3, V4. But also there's like a adoption phase, right, for searcher even as well. So probably at some point later we should be able to like look at it.
To do market for future arbitrage investigation.
If I ask you like what's the most bullish metrics, do you have one?
Oh, most bullish metric. I guess Euler swap as a protocol, like hooks in general, like I'm really bullish on because like Bunny is doing quite well and like Euler swap is doing quite well without incentive. Like incentive only launched today, but it was like already the number one hook by like hooked volume for like many days, like even 2 weeks. I want to say. So I think this like really demonstrates when your hook actually changes the market dynamic. Like even without marketing or anything, like you will actually get results because similar to like V3 when V3 launched, it's just like a superior product. Therefore, people would like go through it. So I'm really bullish with the hook and then the future that hooks bring for the EMM pools.
Let's switch gears and talk about Unichain, which is the chain that Uniswap launched also in February. Is that correct?
Yeah, so we launched Unichain second week of February, 2 weeks after we launched V4.
So why do you guys launch Unischain in this sea of L2s?
The main driver why I wanted to launch Unichain is we've built products at all points in the stack at this point, right? We have an API, we have an interface, we've built DEX protocols, we've become, the DEX protocols have been kind of our bread and butter, what we've become really known for and trusted for. And so the final level of the stack is ultimately the blockchain, like it's the bottom level. It's kind of what you develop upon. And I think when we were working on V4, there were certain moments where, we are dependent on the chain and the chain's development in order to have certain features and enact certain things. And so I think that the premise of launching Unichain was ultimately like, how can we take our knowledge of every other point in the stack and kind of creating a new base? How can we iterate faster and build cooler things? And so it's just like another tool in our development, essentially, for us to kind of play around with and figure out how can we create the best experience for our users now that we are able to not just iterate on, from protocols up, but actually as well at the chain level. So yeah, that's how I would describe why we created Unichain. And then it kind of trickles into all of the features, we have available with Unichain. So faster block times, the concept of PGA, though that's not new, the, revert protection, which will ultimately be reintroduced shortly. All of these things are kind of to help the users as well as to kind of help LPs and the supply side as well.
So would you say that liquidity aside, Unichain is the best place for an AMM protocol to live on?
Absolutely. Yes. And I think especially if you're building on top of V4, Unichain is probably one of the best places to build on top of first. Just because I think that's kind of our focus here at Labs. And therefore, we'll probably have the most resources. And I know that the foundation also works a lot on Unichain and developers on Unichain.
And so I guess like what are the main use cases so far has been taking adoption? I would imagine like even though it's a generalized L2 heavily, a lot of them are going to be DeFi. Would you name a few that are like the biggest one?
The biggest ones in terms of like protocols that have been
Like say volumes or number of users or activities.
like adoption metrics essentially.
Right. Yeah.
Okay. So I think I think volume is probably one of our biggest adoption metrics, and specifically like almost all of the volume on Unichain right now is V4. And so I think when we look at the proportion of V4 volume that occurs on Unichain and we think about the growth of V4 and how we hope V4 to grow, Unichain is one of the 60% of V4 volume is on Unichain. And so therefore, if you're thinking long-term, kind of where we see the vision in the future, I think that sets up Unichain as like a very big piece in the growth puzzle. I think another, kind of thing that I've discussed and talked about before is, yes, we've seen actually pretty consistent growth in our transactions. And whether or not that is the most important thing is up for debate. But I will say that we have seen growth in our transactions and also started to see kind of the percentage of reverted transactions, which I spoke about a few weeks ago, actually in a talk, start to trend down, which is interesting to kind of monitor and see, especially when we have revert protection. I think it's going to be interesting to see kind of, well, one, that number should ideally go to zero, right? But two, kind of if we see the same level of transactions with lower reverts, what does that mean? How do we understand that, basically? I think that's going to be another thing that we're thinking about. I don't know if that specifically answers your question on adoption specifically, but I do think that, when you're comparing chains, transactions is an easy place to turn.
In recently, it's come to light that there's a lot of like spam happening on L2s. How do you think about this? How do you guys try to counter this spam? How do you account for it? I don't know, what do you think about it, and what's a good way forward from here to maybe mitigate that spam without throttling the chain itself?
Yeah, I think though revert protection is not entirely designed to mitigate spam, I think that it has that effect completely. At least with L2s and the types of spam that we've been seeing kind of on base, we have started to see that kind of pick up on Unichain as well. And so revert protection essentially just no longer takes those transactions. It essentially, if the transaction reverts, it just gets dropped and it doesn't even get included and added. And so I think ultimately, like, it opens up block space for, non-spam transactions. Ultimately, hopefully you have like higher signal transactions. And hopefully it keeps costs down for users, though it's still pretty cheap right now. Like that is something that we are thinking about in the future. And, we don't want users paying for all of these spam transactions essentially. So yeah, I think that's going to be the big piece.
Danning, I'm curious if you have other thoughts on how to mitigate spam.
Well, we are actually developing a solution with Unichain right now at Flashbots. Yeah.
Tell us more.
Well, okay, like spam is such a complex term because you can define on-chain spam where currently the bots are like searching arbitrage opportunity on chain using the block spaces. We could simply say like we add revert protection, and this thing can easily also filter out all the things that is like doing all the reading rather than writing. We could also put all these spam bots into a TEE and let them search and using between the time of block building, and they can search and decide if there is arbitrage, and then they submit a transaction on chain. But then that's just offloading the spam to our infra, right? And so I think our team is still trying to actually figure out what's the best way to do it. But it is a trade-off between you want to make your chain cheap and fast, then you're going to cause spam. These bots won't spam on Ethereum, but now you're designing all these L2s and it will come. So yeah, I think I can't tell you the best solution yet, but stay tuned.
How much of Unichain's activity is driven by incentives, do you think, at the moment? I think I was just looking through the governance forum, and it's like the Uni token holders which vote on these liquidity incentives, they were like, okay, Unichain is reasonably the only place that Uni holders will actually earn any money because the revenue of the sequencer actually goes back to Uni holders, right? So I think a lot of the liquidity incentives for Uniswap V4 have been exclusively deployed on Unichain. Have you done any analysis into this, or is this completely foreign speak? Okay, I see.
Yeah, we do.
Interesting. That actually what happens if the incentives run out? And I'm unsure about the incentives, but I just checked a few farming sites, and it does seem that a lot of the kind of Uniswap farming incentives or liquidity provision incentives are exclusively deployed on Unichain. So let's work under that assumption. And then it's is that really the place that I want to be an LP at, or am I currently an LP in that place and I'm swapping in that place? What are the swappers doing? Why do people how does one find their way to Unichain? What's your theory of mind for these people? Are these Uniswap Wallet users, or are these, I don't know, what's the...
Yeah, actually a good portion of users that use the Uniswap wallet do swap on Unichain, and same with, when we first launched Unichain, I think a good portion of the people that we saw, users coming to our web interface as well, also were going to Unichain. And so I think, initially you have interest in those who are in crypto kind of going and trying something new. I think, crypto is a very exploratory environment, essentially. So I think you have curiosity and people will go try new things at first. And then I think since then, I can't really say, what's causing people to come or stay, but I will say that we do a significant portion of our interface volume. And when I say interface, I mean across all three of our platforms. So that's both wallet and web, does come from Unichain. And we do see more interest than maybe at the protocol level.
Uniswap is using its distribution to push people towards Unichain, and then as a retail user, it might not even really fully understand, as it should be. I should not understand why the fuck you want me to go on Unichain, but it's you just tell me hey, the fees are cheaper, or you might earn more money, or whatever, yada yada, and then I end up on Unichain. Is that kind of the...
We haven't really even put out anything around the fees being cheaper or etc. I think it's really been just kind of branding of understanding Unichain is something built by Uniswap. Maybe if you're looking up Uniswap, you recognize the name. I'm not sure. I mean, we have done obviously plenty of marketing around Unichain. And if you do a swap, you will realize that we don't charge fees on Unichain.
No fees does sound exciting. If I put myself in a retail user's shoes, I guess we have once more arrived at the point in this podcast where we should just go and use these products instead of speculating from the outside. Because frankly, I have no idea how the Uniswap, does the Uniswap front end try to get me to like use Unichain, or does the Uniswap wallet try to get me to use the Unichain? I don't know. I guess that would have been, as a good podcast host, we should have done that research. Then we would have a better theory of mind for why people are on Unichain. I'm still left with the question of what happens when the incentives run out, and how much of this is just kind of like incentive farming, and how long does even this program last. But I guess that's for a future episode. Danny, Dobby, can we move on from Unichain, or is there anything more you wanna touch on?
Just to your point of when incentives run out, I think it's just like there's always this chicken or the egg of like how do we bootstrap the system, and incentives are the best way. But we'll see once they stop, if they stick around.
I think it's fair to be skeptical to say like, hey, if the incentive program is causing more usage. But I mean, as a retail user, I haven't heard like if I go swap on Unichain, I will get some like substantial like just like rewards. So I think I would imagine most of the incentive are most to attract developers to like come build on the ecosystem. And I think like that's a fair practice for all these like ecosystems who are doing stuff. So yeah, to me, sounds like pretty green light, and it will be interesting to look at the data again soon.
Right, big fans of Unichain here. I think with that we can we can maybe, I think one of the like also an exciting thing that came out of Uniswap ecosystem. I don't know which Labs Foundation. You adopted 7702 for your wallet, so that must be Labs. So maybe like I think this was 2 or 3 weeks ago at this point. Do you have any? Is there any like interesting metrics, stats, anything that just like top of mind that you think would be interesting to share?
Yeah, I think the biggest one for us that we've kind of been tracking is just like, so one of our big decisions with, smart wallets and enablement, and to basically taking our current EOA wallet that we have now and kind of converting it into a smart wallet, was really like the UX experience that a user will get, not just in this moment now, but kind of eventually down the line, and the things that we want to build with 7702. And so in the fact that we, eventually want our users to have the best UX experience, we also want them all to be smart wallets, right? And so one thing we decided upon was to auto-delegate or auto-enable, not auto-delegate, we don't do that, auto-enable a wallet. So if you have a Uniswap, or you create a new Uniswap wallet today, your wallet will automatically have the smart wallet enabled. And what that means is when you go through to swap, that delegation then will happen on chain. So unless you go through our removal or revoke flow and say, I don't want this, if you create a new wallet today, it'll automatically be a smart wallet. Now, if you already had a wallet, you do have to enable. And enabling is for all chains, but like the delegation piece doesn't happen until you actually go through and do a swap. So there's two things that we're basically interested in that come to fruition with this like setup, right? It's one, you have this population of wallets that have enabled, and then you have the population of wallets that have delegated. And so we're tracking closely the conversion rate essentially of enabled to delegated wallets, because the delegated wallets are what you can see on chain, right? That's what everyone can view and see how many wallets are Uniswap, 7702 smart wallets. But what we can see is actually the population that potentially could become a smart wallet if they swap. And so we've actually seen that conversion rate to be really high. Initially in the first like couple of weeks, that conversion rate was at almost 20% basically, which means that, and also the number of enablement was like it was high, but that conversion rate specifically was extremely, extremely, extremely high. So that was kind of interesting to see. And so we're kind of just tracking that now basically as like a metric of understanding, are these users that are enabling actually going on to swap? do we think that there's excitement around Smart Wallet? Are people like, is that engaging for them? Are they like, what is this thing? Like, and then they're suddenly using the app more, even though there's not really like, the one functionality with that Smart Wallet's kind of allow you to have right now on our app or on our wallet is just like the batch transactions. So approve and swap in the same flow. So, as a user, like, yeah, it's one less click, but like, I don't know.
Well, that's the whole argument of the Solana or like I've heard that argument a million times of like Solana won because like it was so much faster and you just send one transaction instead of two.
Yeah.
And like and so your swap takes 1 second. And like it doesn't matter when it's actually executed, right? And like even though on Unichain it's really quick, but on like if you remember like back on ETH1, it's like you approve something, then you need to wait for the approval transaction to hit for the front end to actually index that the approval transaction has it. And it's like that's like a whole that's like a 2-minute process, and like in worst conditions it's a 5-minute process, which was horrible. So like problem solved. Nice.
One click swaps. But that's the main kind of functionality of a Smart Wallet now. Kind of down the line, we're working on a lot of different things. Hopefully we'll have gas abstraction soon. Ideally, we want to have some form of cosigner so you can do really cool automated trading things, or just like, the design space for 7702 is kind of endless right now. And so we're really excited to like see how that goes and see the kind of things that we want to prioritize building and what our users are interested in, etc. But yeah, right now we've seen, quite a few users that have actually gone through the whole funnel and not just enabled, but actually delegated. So,
is there any research on if people become more addicted to swapping, or like if the casino spins faster once they've enabled 7702?
That's a good question. We actually haven't looked into that quite yet. What we have looked at is like, once a user is delegated, like how many more swaps do they do essentially? And it kind of looks like the same distribution as you see with just users in general. There's like a few of them that do a ton, and then there's some that do maybe just one, maybe two. And so it kind of just, looks like that. But we'll be curious to see kind of if the behavioral differences of the set of delegated and enabled Smart Wallet users does look different. I think we'll need more time for that though.
Yeah, A/B testing would have been interesting in this case. Like, what happens if someone? But like, you basically can't. Like, it's such a powerful feature that you basically can't withhold this from a lot of users, which like that would be weird as hell.
Exactly. We thought about it and then we're like, no.
Yeah.
Not
fair enough. I would have liked the data, but I can. Yeah, you basically like imagine being that user who's like gets into the B group and you're just like, what is everyone talking about?
Yeah.
I don't have the I don't have the one click swaps. What is happening? So yeah, okay, fair enough. But yeah, thanks so much for coming on. I definitely learned something about Uniswap. I didn't know that Uniswap V4 was that successful. I really thought you were waiting for the hooks to come online and kind of like drive some volume. I mean, like realistically, it's just V3 under different guys right now, and like you maybe have some different fee parameters. It's still concentrated liquidity, right? Like nobody, like the hook pools are not driving, like, and they're not the main driver.
You can change that. Like the whole concept of custom accounting is that you can essentially change if you wanted to.
Did you just tell me to become a hook developer, or like did I misunderstand? Okay. yeah. Okay.
Really strong interest in these contracts. I think you should go and explore them.
Okay. Fair enough. I'll see what I can do. But right. Danning, Dobby, any last words?
Just thanks for Grace and Jackie to come on. I also learned a lot. I might look into how to put my money in Bunni now.
Yeah, same. Thank you, Ton. It was really, really informative. And let's see once there's less incentives. I'd love to see Unichain keep on caring as it does right now.
Yeah, I'll check in 6 months again.
Thanks everyone for listening. This is the Index Podcast. Bye-bye.
Crypto data wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bad chiller, cherry picking liar, we call them out and set chart crown on fire.